Hi everybody, welcome back to the channel, and today we are talking about a penny stock. Now I know that when it comes to penny stocks, there's a lot of opinions about whether penny stocks are bad or good or whatever. It seems like the younger generation is more open to the idea of investing in these types of companies, but I wanted to talk about a stock that actually is a legitimate business and trades on the over-the-counter markets. And first of all, we can look at the chart here. And this stock was trading under 10 cents per share back in 2020. And then after this big parabolic run, went to over $1.40 per share. So a nice return for those people who got in early before the crowd found out about this stock. Now, of course, after that happened, the stock went, had a crash. And this is typical. What you'll see a lot of times is that they have this large spike, and then after that large spike, maybe there's another large spike, or perhaps there's nothing at all and it just kind of dwindles down. And what happens is that's the type of volatility you're dealing with when it comes to these types of companies, which is why a lot of people don't like touching this type of crap, right? With that being said, the returns that you can make can be substantial. As you can see from this chart, is pretty evident, going from under 10 cents per share all the way up to $1.40 per share is well over a 10x on your investment. So the company we're talking about in particular is IQST. I have talked about this stock on the channel previously, and this is a company that's currently down 1.47%, trading at 0.2175 or just under 22 cents per share. So that's where we finished the day today. What's interesting about this company, though, is that even though it has these wild parabolic spikes and then crashes, and as you can see, it's all the way down here under 25 cents a share from the previous peak, the numbers that this company is actually doing are legitimate. And if you look at the revenue, for example, in 2023, they posted $107 million in revenue, and just looking back at 2022, they had $77.49 million. They had $59 million in 2021, and in 2020 they had $25 million in revenue. So this is a company that obviously knows how to generate revenue. This is not a company that's not really doing anything. This is a real company that is trading on what's called the OTC markets, which, if you know anything about the OTC markets, it's notorious for higher risk, higher volatility, and lower liquidity, which basically means that these stocks can see very large parabolic spikes, as we saw on the chart here, and then what can happen is they can sell off. So essentially what you have here is a stock that is sold off from the peak and now is down. If you look over the last year, actually, this stock is, I think over the last year, is probably kind of flat. But, okay, so it's actually up 97% over the last year. But over the last 5 years, as you can see, if you've just held this stock from the absolute peak and everything that happened, you can see that even before then in 2019, it had this other spike where it was trading over $2 a share. And so kind of going back to this peak at $1.43, it's down 83% over the last 5 years altogether. So that kind of shows you where things can end up with stocks like this, because it began at $1.31. It peaked off again in 2021 at $1.44. And now we're down 83% cumulatively over the last 5 years. But, things are starting to change in the market. And this is something that I've noticed, and we have NVIDIA and a lot of growth stocks that are taking off again. And typically what happens is, and I've noticed that when other stocks start going parabolic, when you have some of those stocks leading the charge, like those big tech companies that are really starting to take off, especially NVIDIA is a prime example, these companies tend to follow suit eventually, right? So you start to see these types of stocks actually make those moves where you have opportunities to make some money. Now, of course, the important thing is with these penny stocks is to be quick, because I've gotten caught in situations before where the stock will sell off drastically, and of course, once it happens, it's too late. There's just simply not enough liquidity to get out all the time with these things. And depending on the trading volume, you might only have a couple weeks or a month. For example, back in 2020, when this stock went parabolic in December, it was all fun and games until it crashed like 50% from the peak, right? So basically what you're looking at is under 10 cents per share in December, and then by February the stock's over $1 per share. So you really had like a 2-month span to where the stock was going parabolic. You had probably 8 or 10 weeks to where you actually had an opportunity to do anything before the stock started, collapsing. And even then, it was still over 50 cents up until April. So you still had an opportunity if you bought under, let's say, 10 cents a share, and you were kind of one of these buyers down here. That's so important when it comes to these types of stocks as well, is because when we talk about psychology of trading and investing, what it comes down to is this cycle of fear and greed. And I've talked about this previously, like with NVIDIA, it's, obviously a more extreme example. It's a much larger company, but, NVIDIA has been going parabolic nonstop. So when we talk about a stock that's in extreme greed phase right now, I would argue that NVIDIA is probably in that phase where I would be very careful buying the stock at these inflated levels. But if you already own the stock and you bought the stock at a good price, let's say back in 2020 or so, then you might be doing pretty good for yourself. So with that being said, we take a look at a stock like IQST, and we've kind of traded in this range here for a while. And now the question is, can this stock actually make a move above $1? And can you actually profit in that scenario? And the answer is yes, if you actually take your profits when the stock goes up. With that being said, we have total revenue of $107 million. So then the other question is, even though the trading volume and the volatility and stuff is kind of out of whack because it trades on the OTC markets, we have a market cap right now of $39 million, and we have revenues of over $100 million, basically. So with that being said, a company like this, and one other thing I'll say about this company is that if you look at the outstanding share count, we're at 178 million. Now, I have really not noticed a lot of dilution with this stock, and I've kind of kept an eye on it from time to time. And I will say one thing about this management team and this company in particular is that they are not diluting shareholders substantially. And it looks like they've done a pretty good job at keeping the share structure fairly clean. And ultimately, there's only 172 million unrestricted shares, which basically means the float is, as you can see, 170 million as most recently updated on May 15th, 2024. So basically, we have a float of about 170 million. And if you actually look at this company, you can see what's going on with, exactly what they're doing, right? So it's a U.S.-based multinational public company, and it says they're preparing for a NASDAQ uplisting with 105 million in revenue forecast. IQSTEL, or however you pronounce it, IQST, its mission is to serve basic human needs in today's modern world by making the necessary tools accessible. And then it says regardless of race, ethnicity, religion, socioeconomic status, or identity. IQST recognizes that in today's modern world, the pursuit of human hierarchy or needs, all of these other things right here, relationship, esteem, self-actualization, all that stuff. So basically it ties into their business. What I care about as an investor are the numbers. And what I will say is that this company has done a fantastic job at actually generating a lot of revenue. And of course, when we look at the growth of the revenue too, they've actually grown these numbers over the long term. So, let me know what you guys think in the comments down below. This is obviously high risk, high reward stuff, especially that this doesn't trade on a national exchange. And I always try to, balance those risks with the potential rewards. This stock has over 10x previously, so it is possible that this could happen again. Past performance is not necessarily indicative of future success. But if we look at these numbers and we look at the fact, they still have a negative net income number, so that's something to consider. But if they're going to keep on growing those revenues and actually keep growing as a business, then perhaps this is something to consider. Because at a current market cap of, let's say, $39 million, you could make the argument that this stock is fairly undervalued and that perhaps this deserves a higher valuation altogether. And if that's the case, then perhaps 21 or 22 cents a share simply is not going to cut it for this company. Perhaps this stock needs to be trading above 50 cents per share. Perhaps above $1 per share would be a more appropriate valuation. But at the same time, this all works together with the fear and greed cycle that we've talked about many times on this channel in the past and continue to bring up because it's so important. Whether you're looking at a stock like NVIDIA, which has gone absolutely parabolic, or a stock like this, which is kind of trading at the lower end of the range, you can ask yourself what your ultimate risk reward is and what you should be considering as an investor without actually, acting emotionally and kind of looking at things logically, right? So we can look at things logically and say, okay, the stock has sold off quite a bit from the peak. What's the chance of this stock being not only undervalued, but then also that the market realizes something like that happens and the stock actually takes off again, maybe goes up 4x or 5x to where I can actually make a decent return on this company. With that being said, guys, let me know once again what you think in the comments down below. Hope you enjoyed this video, and we will see you in the next one. Take care.